Hello, everyone. It is so good to see all of your beautiful faces here at Future Proof. How are you? That's right. Okay, we're going to keep the energy high. But yes, if we haven't met yet, I'm Nicole Casperson. I'm the founder of FinTech is Femme, a media company dedicated to upholding FinTech's promise of financial inclusivity by elevating the stories of women and diverse leaders. Now, I think we might all be able to agree, maybe, that artificial intelligence is possibly the hottest, buzziest, trendiest word of 2023. And as applications like ChatGPT continue to dominate the narrative, I think it's critically important as financial advisors, as wealth managers, to understand where we fit in that narrative, to remain culturally relevant. So, to help answer some of your burning questions, or at least the ones I have for sure, about how AI and wealth management intersect, we have an AI expert with us, Ravi Koka, the CEO and founder of Stock Snips.
Hello, everyone. Hope you're having a great time. This is exciting to be here.
Yes, well, we are excited to get started. So first and foremost, I like to start these conversations, Ravi, by getting a better understanding of how does one become personally invested in the intersection of AI and wealth management?
You know, it started a very long time ago, 3 decades ago. My mentor, I was lucky, my mentor, who was a professor at Carnegie Mellon University, was the one who invented the first speech recognition system, machines being able to understand speech. We're talking now in the 80s. And what you've seen, Alexa, Siri, all of that was built on this foundational technology that was built at Carnegie Mellon University, and of course with OpenAI and so on. So that's what fascinated me, and what I've done all through my life is to look at the intersection of technology and a domain. And so using natural language processing, large language models, with recent developments in computing, I said, and a little bit of background in investing, so that's what led me personally in a very passionate way to pursue the use of AI in asset management and investing.
I mean, that's one way to get started. You've seen it from, it feels like the beginning. I mean, how has it been seeing the evolution to today?
For those of you, who've seen these developments over the last, AI has been around 50 years. It's not new. The term was coined by McCarthy 50 years ago. What happened, though? Why did it take so long? What happened was initially there was a lot of hype and a lot of interest in AI, but computing power was just not there. So then it went into almost like 10 to 15 years as what's called the AI winter. But here we are, you got all the computing power you have, everybody's walking around with a supercomputer in their pocket, and then you have this quantum leap in large language models that's made things that are almost unimaginable. If I went back to ask people who did foundational research in AI 30 years ago, they'll be shocked at the things that we are able to do today.
No, absolutely. And okay, let's keep shocking and awing, I guess. I want to get into how AI is, really this extension of the human cognitive, right? It's funny, in our financial advice world and wealth management world, we tend to think that technology is going to be something that replaces us, when the reality is it's actually something that is a tool to help us become better humans, that can be better, servicers to our clients and our users. So, how is AI actually addressing the challenges that financial advisors can face today in terms of wanting to be more human for their clients?
You should think of AI as an extension or an amplification of human cognitive ability, just as the submarines and the airplanes, allowed us to, improve the human motor capability, allowed us to explore the oceans and the skies. So AI, by extending or amplifying human cognitive capabilities, is going to make you do things that most human beings would otherwise not be able to do. For example, if you look at OpenAI and the underlying technology with ChatGPT, so think of a person who's read every book in the world, in every library in the world, every blog in the world, and is able to ask almost immediately answer any question. That's the power. That's what it's doing. It's really amplified. By the way, most of us human beings in our lifetimes can only store in our brains about 70,000 concepts.
Only.
That's it. But here suddenly you have a machine which can both breadth and depth and volume. So that's what's, so the question now is how does it impact the world of investing, the world of advisors? I think there's a lot of exciting applications for you guys, and I'll get into it as we get into some of the other questions that you may have.
Yeah, I mean, let's start with those applications that are really tactical for financial advisors and what they need to serve their clients. Let's start with personalization.
So for example, AI reasoning systems, expert systems have been around. It's not new, has been used extensively by, some of the hedge funds use it, some of the large banks and asset management firms use it. So that part is not new. So what is new in the last, especially in the last year, is what is called generative AI, which is revolutionized by the introduction of ChatGPT. Now, that has, very wide applications. So for example, I'm sure some of you or most of you are already using it for automating email communication, generating creative content, campaign, integrating that into your marketing campaign management. So that's where I see the immediate application, which will impact advisors because it will take away some of these tasks that you have to do on a daily basis, including Excel calculations. You can almost automate most of the Excel calculations using GPT-4 or GPT Plus. You need the extended version. So I see, these would be the initial applications, and of course there will be more advanced applications like asset allocation, portfolio construction, and so on.
Okay, so once an advisor is ready to use a ChatGPT or another AI application to do some more of their mundane tasks or to help them with marketing campaigns or communications, what's like the next layer after that? If that's like step one almost to get comfortable with ChatGPT, what is another way?
So if you look in the crystal ball and can kind of map out where is AI going to go, I would say it's almost just like you have an iPhone in your pocket, think of an AI co-pilot in every financial advisor's pocket. So what does that mean? A co-pilot can personalize. Right now, you do not have the time. If you have, let's say, 50 clients, you don't have the time to personalize whether it's an email or whether it's an alert or whether it's a certain piece of content. So here is a co-pilot which can help you do that. These are called intelligent agents, and that's the future. In fact, you already have seen there's just last week there's a co-pilot introduced for financial analysts. What does that mean? He wants some calculations to be done, on a personalized manner, and an email sent out to a particular client that can be done. So that type of is where I see the future going with AI. The applications are boundless. I can't sit here and claim I know every possible application because just like ChatGPT surprised most of us who've been in this area for a long time.
And when it comes to the personalization of the portfolio construction, which you kind of mentioned, right? So we have comms, marketing, portfolio construction. Is that something, should we be worried about that? Is that something, or how do we feel more comfortable with using it when it comes to something like that? Because when it comes to comms, you can kind of be your own editor, you can tweak it, you can make those changes, but sometimes with portfolio construction, that can feel a little bit more daunting.
My view is you should never be worried about technology, right? I mean, it started all the way from the invention of the wheel. We had the printing press. I mean, people were worried when the printing press came out. There was a huge worry about, misinformation or, all kinds of bad things that could happen. And then we saw the internet. We've seen the growth of computing. To me, AI is a powerful tool There could be bad things that can be done with it, but right now, when it comes to, for example, uh, building portfolios that can adapt to changing market conditions, that's the biggest problem. What's the holy grail? It's the timing, right? How do you, most portfolios, you build them and then you leave them as is. You're not constantly changing them because you don't know when to time it, right? So if there is a use of AI, it's going to be in more advanced, think of them as more advanced quantitative models that can be more adaptive to changing style and market regimes. And that should be a plus for you because you can then deliver better outcomes to your clients.
And I almost want to think about this AI from a behavioral finance standpoint as well, because it is using it to understand more of the human behavior, if you will. You had mentioned, as humans, we can only take so much context and so much content in our heads, and to be able, to spit as much out possible to our clients is frankly not necessarily in our capabilities, but it is in AI. So how does AI actually help us get a better understanding of the behaviors of our users? I know through stock snips you do that through financial news. So what are some ways that advisors can actually leverage that?
It's a great question. So I think IBM had a report that said that in the last 2 years, 90% of all of the information available was created in the last 2 years. Now, is it possible for a human to digest all of that? The answer is no. And this is where, and for example, the other thing that has happened is, we all know this, that the market, the stock prices are not driven only by fundamentals. They're driven by emotion, investor emotions. So how do you measure investor emotion? So that's a use case. In fact, my company, if you come by, will tell you more about it. This is not a stage for that. But in general, there are vendors out there, including Bloomberg and AlphaSense and others. What they've done is to take a large amount of information, digest all of that information, and be able to pick the nuggets that are important, that impact stock price. And it is possible to create accurate measures of investor emotion and sentiment, and so use that as an additional factor in portfolio construction. So that's a very strong use case. So you're capturing emotion, not just fundamentals, because emotions drive price. That's been proven in several studies, and I'm happy to talk more about it, but that's where I see the behavioral finance aspect of that and AI enabling that is a huge impact on portfolio construction.
I love the idea of really this ability to measure emotion, human emotion. And you don't think of human emotion as something that is measurable, right? But to think that artificial intelligence can be this tool that does that for us and then thus makes it easier for portfolio construction and to serve your client better is very, very cool. And to me, it actually hits on something that I'm calling the hubris factor, which is I've just made this up, but it is the thought that you could create a solution for someone without the person in the room who the problem directly affects. How are you supposed to create solutions for a client if their emotions and behaviors aren't a part of the way you go about solving the problem?
Well, that's the thing, right? It's not one individual doesn't drive the entire market, right? It's the collective. So really what this is doing is it's capturing a 360-degree view of emotion, not just one person's emotions, right? This is not, by the way, this is not new. If you went back to Wall Street 3 decades ago, people sit around in coffee shops, have discussions, and they'll go and trade, right? So all that's happening here, it's happening in a much more accelerated manner. You are able to, for example, we process 50,000 articles every day, and the more important, it's not the volume, it's what part of those articles are relevant for a particular company. That's the difficult part. So it's the collective wisdom in the 360-degree view, and not just macro or idiosyncratic factors, but all of the factors. It could be the war, it could be interest rates, it could be what the Federal Reserve will do. So all of that is getting baked into this. That's the power. That's the power of AI, to be able to recognize patterns in unstructured information. Quantitative models processing large amounts of data have been around forever, but recognizing asymmetric, for example, supply chain is a good example. Apple has a small supplier in the Netherlands. Something happens to him, that's going to affect the entire, supply chain and the output of Apple, right? So that's the kind of thing that recognizing those patterns at the right time is what I see AI benefiting.
And I think that's such a tactical piece of information. And what up? Anyways, moving on. Outside conferences. So when it comes to, first of all, that's a very tactical way of thinking about AI and leveraging it as a financial advisor or wealth manager in your business to actually recognize the patterns of what is going on and understanding that human behavior. So you said the big word, though, in your response there, the big word on maybe everyone's mind, which is the Federal Reserve, which gets me to compliance, everyone's favorite topic. So for financial advisors, they always got to think of this, okay, what am I going to leverage this trendy technology? Am I going to get in trouble? Am I going to break some sort of rule or, that type of thing? So when it comes to the regulation side of AI and, it's tale as old as time that regulation tends to take a lot longer than innovation, right? So what do advisors, do they need to be thinking about that? Do they not?
Compliance is not going to go away. We all know that. How are these AI models going to make life more difficult? I don't think it's any different from what you do today in the sense that these models tend to be black box models. So it's more on the firm or the company that, the institution that's creating the models. That's what you have to look at. So there is something called explainability or transparency. That means if you're going to invest in an AI strategy, whoever that institution is that is offering that strategy, they better be able to explain what those models do, how do they work, what are the risks, and so you're evaluating it. Your evaluation process is no different from how you evaluate any mutual fund or ETF or a crypto or anything, right? You're going to look at your customer requirements, their risk appetite, and then you're going to say, is this something suitable for my client? And do I understand this strategy or not? So that's really more on the firm. From your point of view, you're still going to do that. And I definitely think that the SEC is going to come up with more guidelines on AI models. They already have. For example, you do have to document these models. You have to be able to reproduce results. For example, the biggest thing you should ask is, every time you run the model, it can give you a different result. That's called repeatability and consistency. So there's all kinds of checks. So in a way, it's not new because any quantitative firm that's here will tell you that that's what they do, even in any of the quantitative models. Yeah. So the AI is nothing but more advanced quantitative models, and will have guardrails. And my advice would be, there will be platforms that will help you keep track or monitor these models. And I would definitely go subscribe to those if you're going to play in the AI strategies. I would definitely think that you want those type of assist, so that your risk is not increased.
Yeah, no, really well said. And we have a few minutes left, so be sure to pull in those questions, put them in Slido, any burning questions that you have for Ravi that you want to ask about AI and wealth management. But I want to ask about ethics. There is a lot of discussion around AI being ethical. And as advisors, we do have to be ready for those questions that may come up from a client. So what do you say to that, given, the thing I'm hearing and reading a lot about is that with AI, it can be very much, garbage in, garbage out. Maybe you've heard that phrase before. So how do you, if you're an advisor just trying to figure this out, how do you navigate that? And if you're using an AI that is actually reliable and one that you can trust?
You can expect, as you've already seen, not just in the financial world, but elsewhere, there's going to be misinformation. There's going to be deep fakes. How are you going to figure that out? I do think there's going to be technology that's going to help detect these things. So that's one aspect of it. The second part of it, again, the onus is on the firm or the institution that's creating the model. If they have ethical principles, and so you need to look at the firm, who are the people behind it. So in that sense, it's not different from what you do today. Today, when you look at a strategy, you're looking at the people who created that strategy. If those people are not ethical, they don't have a track record, you're not going to go with it. So I would do exactly the same thing. If someone's saying this is an AI model, an AI strategy, you want to ask all of those questions. Who are the people who created it? What are the algorithms they use? What are the data they use? Has it been, model tested, back tested? How much of live testing? So, I'm not, this is stuff you guys do all the time, so I don't have to tell you how to be able to, how to go about this, navigate this. However, there will be additional tools required to detect what is called misinformation, deep fakes, or for example, if a model is hallucinating and suddenly goes haywire, there should be ways of being able to detect those, and I think you will see companies step up and do that.
And for the advisors out here who are hearing everything that you're saying and going, yes, I want to implement AI, I want to start using it, how do I get started? What would be maybe like the steps you would take in their shoes?
So the question is, are you late to the party? The answer is absolutely no. Is this the right time to get in? I think it is. It has matured. The technology has gone from hype and all of the talk to some really, real models that are being available. So I would start small. My mantra is, think big, start small, scale fast, right? That's the mantra. So you do want to get experience. The early bird catches the worm. So if you can get, you don't have to, AI is not going to become the core strategy. So if you have a core strategy and you want an exposure for your clients to get into, the innovative strategies, I would start small with a small amount of allocation, gain the experience, understand it, and then scale. Then if you like it, then you'll figure it out on your own, how to allocate and at the same time, protect the clients, risks and challenges that may throw up.
All right, then I got to reverse the question, because we're going to have our naysayers out there, right? Folks that are like, AI, it's the new trend. Remember the metaverse, that kind of thing. Like, it's going to be the next thing to pass, if you will. It's been around a long time. It comes, it goes, whatever. What would you say to the ones out here that are like, nah, I'm not going to implement AI. I don't need to?
Well, I go back to my example, right? The wheel, the printing press, the internet, the computer. I mean, when computers came, what did people say? No, what's going to happen to, your jobs will be lost and so on and so forth. And here we are 50 years later and, we're doing fine. So I would say that for example, AI is going to be so ubiquitous, you may not even recognize it. Every software that you use will have underneath the covers, it'll have AI, just as everything uses the internet these days, right? We have a few questions, looks like.
We do, I love it. Okay, great first question. Do you think that the broader public is likely to be hostile to AI over time? There has been a lot of social media trends with AI and things, and it does get a little dicey, especially in terms of the ethics that we talked about. So.
It's not my expertise. I'm not a politician or a somebody who can predict the behavior of the public. But I do think the broader public needs education. I mean, ultimately, most of the concerns come out of either ignorance, fear. Fear comes from ignorance. So to the extent every one of us can go out and say, look, AI is just another tool. It's not something that's going to take away, what you do. I believe if you educate, I think that's the best we can do. And I do think already you're seeing a lot of debate, right? You've seen a lot of debate. The people like the Elon Musks and the Sam Altmans and Jeffrey Hinton, who's the father of machine learning and ChatGPT and so on. He's been out there educating people about the pros and cons of AI. If you have not seen his interviews, just go to YouTube. I think there'll be a lot of education, and to me, that is what is going to the broader public will get comfortable with it.
Yeah, and I think that you said it earlier. You have to do your due diligence. Not just look at how good the AI product or service is for you. Who created it? Where are they pulling their data from? A lot of AI and even ChatGPT in its early days, it drew a lot of its information from social media platforms like Reddit and Twitter. Majority of those platforms are made up of male users. So that means you're getting an algorithm that is largely having one view or pulling from one type of platform with one type of view. So it's like you have to be mindful of where the algorithm is pulling that information. And I think that in terms of some of the social media platforms, when Elon Musk took over Twitter, one of the first things he did was fire his ethical AI team. So we have to be mindful of that. There's a fascinating Rolling Stone article about that, so feel free to go check it out. It's all about the incredible brown women in the AI ethics space who are really passionate about making AI human, and so I would just add that to your thought. Yes?
There's another question about...
Yes. So there is the thing about ChatGPT making stuff up, tough, including academic papers. How do we be more comfortable using it in such a regulated industry?
That is a problem. It's a recognized problem. I mean, the non-academic term used is, they say the model is hallucinating. That's just a polite way of saying it. So the important thing is, I don't think you should take the output of ChatGPT as a given, right? You definitely need to cross-check, depending on what it is. And I think there's more and more guardrails, safety stuff that's coming out. If you've not used GPT+, GPT+ is much better already than GPT, ChatGPT. So, and the difference, for example, ChatGPT, the underlying model, was trained on 500 billion tokens. Tokens are words or characters, string of characters. GPT Plus already has been trained on 1 trillion tokens, which means it's a lot more accurate, and there are all kinds of additional plugins. For example, if you want to process Excel, there's a plugin where an Excel file, it'll read the Excel file. For example, I tried it. I said, here is a file, here is the returns for the last 5 years, calculate the Sharpe ratio. It actually gave me the code, gave me the answer, explained what is the mathematics behind calculating the Sharpe ratio, gave me the actual code. The answer actually was wrong slightly, but you have the ability to cross-check. That's what I would do with ChatGPT. I would not take it as a given.
All right, I know we are out of time, but I love all the questions. There were more in there, so be sure to find Ravi or myself, and we can probably help answer some of those. Thank you all so much for being engaging, for joining us in this conversation, and I hope you learned something.
Thank you very much, and I'm going to be around, so just flag me down and ask. If it didn't answer your question, please flag me down.